What if a company lost $1 billion in 90 days, but the markets didn't seem to care? That's what's happening with Uber right now. Uber reporting a $1 billion loss in the quarter as costs grow for drivers and food delivery. But that was in line with the company's estimates, and revenue did rise 20%, which was at the high end of Uber's forecast. Joining us now is Ben Harburg. He is managing partner at MSA Capital, as well as an early Uber investor. Ben, are you surprised the stock is actually mildly higher, given that they lost $1 billion in 3 months?
I'm not. I mean, I think it still performed better than expectations, and a lot of the new business lines where this whole platform play really comes to light are doing incredibly well. You know, you saw 260% growth in the other bets business. That's Uber Freight, micromobility. You saw Uber Eats up 108%. I think they're proving now that they can start to integrate their value chain and maximize utility of the cars that they have in their fleet and drive a lot of value through that.
What was the most positive takeaway from the quarter?
I think it has to be Eats, right? So the business, grew its revenue by 89%. It has about 25% of market share in the U.S. and is also doing well globally. Its nearest competitor in the U.S., someone like DoorDash, already values itself now in the private markets at about $13 billion. That's not too far off of what Lyft is valued at today. And so I think this is a business that proves that this platform works. And you'll see now a further expansion into these ancillary businesses. So freight, micromobility, everything makes sense. We know that model well here in China, where you integrate things across a value chain that fit well into each other sequentially. And so we're really excited about how those businesses can grow. And ultimately, one day, I think some could be more valuable than the current market share of Uber. You see someone like Uber Eats being in that ballpark. Autonomous one day could be worth more than the company, or even the stake in Didi. A company that's doing 30 million rides a day compared to Uber's 17.
If you had to be critical of the quarter, Ben, what were you disappointed with?
I think the take rate's still relatively low. They've not proven that they can increase their margins.
What does that mean?
Sure. So the amount that they're actually taking as a margin after they've given money over to the drivers and covered costs. So essentially their margin on each transaction decreased a bit. It's at about 18%. It's been as high as 30% in their core business over the period, and the take rate on Uber Eats is only about 8%. So those were a little disappointing for us.